Now, if you have any questions, please ask. Okay, at the moment is question time. By the way, for guys who are new here, how did you like this format? You know, so did you enjoy it? I can turn on the sounds again, just a second. Just a second, how can I give you voices again? Participants. Okay, I allowed you to unmute yourself. You can give a voice if you like it. Okay, you enjoyed, fantastic, insightful. Okay, fantastic. Now, guys, what I plan to do, because we already got some emails prior to that, if it's going to be explanation step-by-step guide. So we've decided that we're going to run seminar a bit different from today's, because today we already analyzed the company. So I didn't go into specific details in the sequence, but I presume it's quite clear for you how it happened, right? So you have a certain understanding how evaluation of each particular company is done. And but you don't know how to buy, where to buy, you know, what broker to open, what kind of trades, what different options, etc. So today's was like, especially the last part, when the most interesting, how to buy and when to buy. The question is where I put my money, right? So how do I do it? So next week, we're going to run online event, and where we're going to talk about general information. It's called step-by-step guide for stock market trading. So, and I will explain you in specific already like a theory. I will give you some examples as well, and maybe more examples about option trading, which just was in the end, how to evaluate, how to understand it, what kind of option strategies exist. And we're going to run it next Wednesday. So in a week time, 29th of July at 12 p.m. Okay, and what we'll do, if you probably registered for this event in any way in our database, I'm going to send you invitation link on Thursday. Is it all right? Not tomorrow. Tomorrow, like today, I'm going to ask my staff to kind of complete this recording, to finalize it, and maybe to put it on our YouTube channel. And then to send you tomorrow, you will get a recording of this event. Okay, but on Thursday, I will send you the invitation for the next week webinar. Okay, please keep an eye on the date. I presume it's 29th, as I agreed. With that, if something changes, we will notify you about it. I believe it's 29th of Wednesday. Yes, correct, man. You know that as well. So is it 29th or 20 on Tuesday? I think it's Wednesday, right? So just a second. 29th. Okay, perfect. And for other members, for guys who are in our club, so we have 28th of July. That would be Tuesday. We have our investment club meeting. I will go into guys run it again in my place. Yes, of course, Daniel, you can ask question.
Okay, thank you, Igor, for your session. Much appreciated. A lot to learn, a lot to digest, and already learned a lot. So my question is, at the very beginning, when you're talking about overvaluing and undervaluing, like of some, you know, stocks and companies and even indices, and then you suddenly talk about volatility, and you say, when it's like high volatility, it's where we go into the market, and I don't see how these two like relate together.
Okay, I got it. So volatility, in my understanding, what I meant by saying that, usually during the daytime, if you open the market, the company will move around 1 to 2%. So 1% up, 1% down, 1% up, 1% down. So it's like a regular volatility. So it's like amplitude of movement of the particular stock or indexes, right? Mm-hmm. So during the pandemic time, when it was falling, it was an unprecedented case. It's never happened before, at least not in my trading history, where during one day the stock might move up to 30%. So can you imagine your stock today is $10 and tomorrow is $13? And same story with indexes. Indexes, like a general, as I already explained, it's a general combination of different stocks. Like Nasdaq is 100 tech stock, S&P is 500 different stocks, right? Sometimes they move 10% up or 10% down within one day. That's what I called high volatility period. Okay, and we cannot predict it. We can never tell when this volatility happens, because as somebody mentioned, you cannot do anything about Donald Trump's tweets. If this guy decides to tweet something that he is going into war with North Korea, or again put some tariffs on China, the market reacts on it. And but so from one point of view, it's kind of a bad thing, because we never know what to expect. But at the same time, if you're preparing yourself and you think, I want to buy this company, but I don't want to buy $93 for that. I want to buy for this only $80. But you don't know if it's going to go ever to $80. If you keep an eye only at one company, it might never happen. You keep a cash and never invest. But if you have in your watch list, let's say 15 companies, and you keep an eye on them, and then Donald Trump tells something silly, and the market reacts, and your good company drops down, and now at the price which you wanted to buy, you put money and buy it. So it's like a sales period. So we constantly wait this sales period. We don't know when it happens, but usually it does. Okay, and usually something like that on the market always represents itself, and we put money in this particular case. When everyone is panicking, everyone is selling, and majority of people who trade on the market, they don't know. If they see the market goes down, they really stressful. They just decide, okay, it's better to close positions and wait and see. Who knows, maybe it's another recession and the stock goes 30% down. It's better sell it. And they start selling, and of course, it doesn't really matter, good company or bad company, they all go in prices. Because if you think about logically, imagine that, for instance, Donald Trump says something bad about tariffs with China, but how it affects performance of several businesses, like for example, if it is Disney, right? They operate it and operate. People still watch movies, they still go to parks, they still do. There is no tariffs on the Disney products. Right? But the stock still collapses 5%. So it can, if you wanted to buy Disney, you would be able to buy Disney at a cheaper price at this particular point. So that's how market operates. So there is a general emotions, and there are kind of fundamental parameters. And you have to always keep fundamental parameters kind of inside of your head, and then react on emotions, but in opposite direction. When people panicking, if fearful, you become greedy. When everyone is greedy and they buy everything, you become fearful. You kind of stay away from the market and wait, like we do now, because it's, from my opinion, it's too high now. People got too excited that the pandemic didn't go in a wrong way, like in 2008, and market recovered, which is wrong. I think wrong, because I mean businesses are still suffering a lot.
Right. Yeah, that makes sense.
This is the stuff like that. By the way, Sophia just sent the link. Sophia is my personal assistant. She helps our team members. She sent the link to the page for the next week webinar, so educational webinar. So if you want to register, you can guys go there and have a look at this. And Mika actually has a very good point. So volatility is a part of the option price formula. When volatility is high, option prices are high. So good time to sell options. Correct. So this is absolutely true, because otherwise people won't be trading options, because what's the point, right? So to sell option if it is very cheap. For even now, I can buy stock and sell it and make 7%. And if you sell option, you make 3%. So it kind of doesn't make sense. Because you have exactly the same risk, but you're making less money. So that's why volatility always included in a stock premium, option premium. But it's another story about explanation. Okay, Jonas is asking, what would you wait till earnings season to invest? All right, very good question, Jonas. Earnings season usually it's more volatile period of time than between earnings, and at the moment exactly this happening. So usually yes, especially when big companies they announce their earnings, it might affect in general the whole market. For example, if one bank reports their earnings, usually banks all together in one day, but if one bank reported and other banks didn't report yet, so people see if the earnings of one particular bank drop down a lot because of, let's say, businesses stop paying them low, back money, they understand that exactly the same happening with other banks. So they start selling, and selling not only the bank which reports their earnings, but also other banks which are going to report next week. Okay, same as retailers. If you go and, for example, one Williams Sonoma, the company which sells furniture, they report bad earnings that nobody went and bought furniture. So we can expect exactly the same from Bed Bath & Beyond. Another company, same structure, that they will suffer, and their reports, for example, in 2-3 days. So you already start selling before they report their earnings, because you can predict that it can be bad. So with the company which we discussed today, it's very unique in a sense, because from one point of view, I never buy before earnings. I try to avoid it. But sometimes I really tempted to do that, because for example, with this particular company, right, I know that during this period of time, they're making more money. And I know that at the moment it's undervalued. So, and also I know that usually when they tell they're going to make $1, they make a bit more. So if that particular earnings, all these factors, they come as a true, the stock will jump up, right? So it's very tempting to go against your own rules and to put some money in it. Okay, so this particular, I might consider to buy on options, so I will reduce my risk, but that's the decision we always have to make on the stock market. Okay. So would you wait until earnings season to invest? It is already now, Jonas started. At the moment, I'm sitting in cash. I'm expecting quite a lot of cash I have. Some shares I'm selling calls, like I just showed now, so renting them out. I'm not going to sell them because they are really undervalued. But I also have a lot of cash prepared already. So I sold some shares last week before, and at the moment I'm just sitting and waiting until the indexes go down. Not necessarily. It depends what your strategy is. Some options, David, next week I'm going to show you that some options, for example, you can, if you sell options, you have to be able to have 100 shares of stock, right? When you buy options, it's different way. So you might put only $100 for one trade or $50 in one trade. So you don't have to have a lot of, but it's more risky strategy, more profitable, but riskier. So you have to consider what to do. Altogether for option trading, about 24 strategies. Most popular is probably 5, 6, something like that. But in general, quite a lot. Combination. Okay, for selling minimum price stock, premium received, multiply by how. Thank you very much, Mick. Good explanation. Guys, by the way, tomorrow we're going to send the link and we're going to put it on YouTube channel, okay? And this is our one masterclass, but I opened few master classes as well because of this pandemic. Usually it's reserved just for our members. I never show this recordings to anyone else, just only for guys who club members. But during this tough time, kind of would say, I opened this for everyone. So you can also go and look at our last master classes, which we ran for the last couple months. If you liked it, so you will learn a lot, I'm sure, during that, and probably you will find a few companies for your watch list. Of course, Daniel was asking, do we need to look at maximum drawdown when analyzing stock? 100%. 100%. So that's why today when we analyze fundamentally, I looked at the debt level and I ask you, okay, what happens if they, like the debt, can they pay the debt or not? And then we looked, they can pay within 2 years. They're making money. Within 2 years, they can get rid of the debt, and that's it. They will be fine. Okay, I look at the risks which they have. Okay, any other questions, guys? Okay, thank you very much in any way for your attending the event. It was nice to see so many people here. And if you like this one, you're very welcome to come next Wednesday. Already kind of, it would be educational one, not like analytical, so with a lot of examples. So if you can come, and then I will talk about the investment club, about education, etc., etc. So if you want to know about it, please come next week. All right, and thank you very much, and see you in a week time or next club meeting. Okay, all the best.